Good morning, traders, and welcome to another Monday Markets Overview with myself, Mark Treadway. Let's start with oil, where we're seeing a fascinating tale of two forces at play. Brent crude has dropped below the $70 mark this morning, trading at $69.80, down 0.48% as Iraq's Kurdistan region resumed crude exports over the weekend after a 2.5-year halt. This adds between 180,000 to 190,000 barrels per day to global supply, with volumes expected to rise to 230,000 BPD. If you're trading oil right now, think about positioning for this additional supply pressure, but don't ignore the geopolitical support from Ukraine's continued strikes on Russian energy infrastructure that drove last week's 5% rally. The grain markets are telling an equally compelling story. U.S. corn production has hit a record 16.81 billion bushels, according to the latest USDA reports. Yet prices remain surprisingly resilient, around $4.21 per bushel. The market's seen the largest carryover in 7 years at 2.11 billion bushels. But here's what's interesting. Crop quality remains strong, with 67% rating good to excellent. If you're trading corn futures, consider the disconnect between bearish fundamentals and price stability. This suggests underlying demand strength that could surprise to the upside. Moving to metals, copper is showing some strength at $4.76 per pound, up over 1% this morning, supported by supply concerns and China's recent stimulus measures. The base metals complex is getting support from China's stock market rally, with the CSI 300 near 3-year highs. If you're positioning in copper or aluminium, which is trading around $2,653 per ton, think about leveraging this Chinese demand optimism while keeping an eye on any supply disruptions. Gold continues its relentless march higher, hitting fresh all-time highs at $3,808 per ounce this morning, with central bank buying continuing and geopolitical tensions elevated. Precious metals traders should consider this momentum could extend, particularly with the dollar showing some weakness. The critical mineral story deserves your attention today. Despite all the talk about the energy transition, lithium, cobalt, and other battery metals are stuck between the demand hopes and oversupply reality. If you're in this space, be cautious about the disconnect between narrative and current pricing fundamentals. Here's what you need to watch this week. OPEC Plus is likely to approve another output hike of at least 137,000 barrels per day, adding more supply pressure to the oil markets. China's LNG imports are set to decline for the 11th straight month, down over 20% year-on-year in September. And keep watching those Russian energy export disruptions. They're providing crucial price support across the energy complex. The geopolitical backdrop remains critical to your trading decisions. Ukraine's drone strikes on Russian infrastructure continues to impact fuel exports, with Moscow curbing diesel and gasoline shipments. This is creating regional supply tightness that supporting refined product margins. For this week, if you're trading energy, watch for continued escalation in Ukraine-Russia tensions while monitoring the Kurdistan supply restoration. Grain traders should focus on export demand data and any weather developments in South America. Metals traders keep China's stimulus story front and center. Their economic data could be the key catalyst for the week ahead. So that's your Monday morning overview. Remember, in these volatile times, risk management isn't just important, it's everything. So stay nimble, stay informed, and let's make it a profitable week.